Welcome to Big Deal. Wish all our viewers a very happy new year. This is the first episode of this particular year, and I thought that it will be a good idea to get some of the deal makers to understand the deal street outlook and the trends that are emerging in the new year. Remember that the year 2021 had been a year of deals, and will 2022 also live up, or it'll beat what we have seen in the year 2021? Let's find out from the team of experts joining us right here on CNBC TV 18. Let me welcome on the show. We have Mohit Saraf of Saraf & Partners. We have Prashant Mehra from Grant Thornton Bharat. Let me welcome on the corporate M&A side Vivek Agarwal from Tech Mahindra, as well as Gaurav Kumar from Upgrad. Gentlemen, so good to have you on CNBC TV 18. Now, Mohit Saraf, from the lawyer's perspective, you have seen deals across all sectors, and the biggest ones being the fundraising ability of the startup world. According to you, how has 21 fared, and vis-a-vis that, how is 22 expected to be?
Very good. Business companies, startups, they have been raising capital, and most companies are not doing organic growth. They're doing inorganic growth, and they're acquiring new businesses. They're going to new territories, new areas, and therefore this has been a great year. The interest rates are all-time low. Private equity is very active. The Indian balance sheets are deleveraged. I would say all these things have added to deal flow. And 2022, I don't see it different. I see things will even go sharper, though there is a Fed is going to reduce balance sheet and things like that. But I don't see this will come down in the way of M&A activity in India. I would say 22 will be even more stronger, and not 2022. Nisha, I would say next 3-4 years are going to be very, very strong for India, because this is the time when we'll move from almost $2,000 per capita to $5,000 per capita.
That's right. It's a good year expected, not just for 2022, but a few years from now, because the momentum has already begun. But Prashant Mehra, like looking at the detailed research that your firm has done on the key highlights, what are the most important aspects that you would like to reflect on?
Hi, Nisha. I think the fundamental aspect that is coming out is that, it's really all about technology, with over $90 billion
Yes.
having been invested in transactions in the last 12 months. More than half of that has come in the technology or technology allied sector. So I think that sector is there to stay. And one reason why that sector will stay is because, technology is not what we used to know. And I have done my first technology deal with Mohit sitting here. But technology definition has advanced. It's about forward integration, backward integration, left, right. It's really the technology sector as such. It's an infrastructure sector currently. It's an enabler. Everything around technology is what is working. I see that even going further. The other very encouraging aspect is that, this is the first year when more than 50% of the value has actually come from the private equity. The private equity world enjoying that much confidence in the Indian market is gratifying. I understand most of that has come in the technology sector as well, but still. And I think the third most important aspect which has come out is that, we've given the world over 30 unicorns in the last 12 months. For a country which is still a developing country by all definitions, giving 30 unicorns to the world and most of that money actually going in startups is phenomenal. So I couldn't agree with Mohit more. The trend will continue.
That's right, and all of us are going to be more busy. But taking off from what Prashant said, that most have been technology-driven, tech platform-driven. Let me come to Tech Mahindra then on this one. Vivek, how do you see the space? And for Tech Mahindra, we had like a strategy of string investments that you've done. You've done some out of offbeat transactions as well when it comes to collaborating with your other group companies in the past, when it comes to a designing company. So you have had a track record of several acquisitions, and not to forget the Satya. So, looking at the present perspective, how do you see tech-led, deals? And is it going to be in the new age companies, or the old, tech companies like yourself will have a fair share?
So Nisha, I mean, if I look at our strategy or the sector overall, there is a segment about tech investments in India, and that's one category. And then there is a second category, which is outbound transactions from India going out to the world. And I think clearly we largely play in the second sector where a lot of our capital deployment happens overseas, which lets us access new capabilities, new technologies. And the way I see it, or the way the industry is evolving, that will continue. I think what you will also see is some of those capabilities, some of those models, some of those technologies being brought back into the country and being tweaked and applied for our environment, for our demographics, etc. And we will look at doing those things either directly or in collaboration with the group. There are opportunities to disrupt core businesses using technology, and that's where our strengths or the strengths of the industry will come into play.
Right, and moving to Gaurav from a space, EduTech, which has seen maximum number of M&A. And Gaurav, my heart goes out to you because there has been a monopolistic M&A strategy by one company in your space. How do you see the competitive edge taking it forward?
Thanks, Nisha. So we ourselves have done 7 M&As in the last 7 months, so have been quite active in the space. But at the same time, we also believe our growth remains very much driven by what we have been doing in our core business. As far as M&As in the space goes, it's about acquiring new capabilities, new technologies, new markets, going international, and that's what we have been focusing on. We definitely see lots of consolidation happening in the space. Lots of cross-border transaction happening as we have witnessed in past, and I don't see that changing. And maybe a couple of years down the line, what will matter is how many people are standing in the sectors, building capabilities, and building long-term outcome for the larger learner group. So taking all that in account, I would be very upbeat on the sector. I would be very bullish on the consolidation in the space, domestically as well as internationally.
Yes. All right. So quite upbeat, but I would say that, COVID continuation gives more certainty to your sector at the moment, while everybody was trying to write off certain sections of the EduTech business already as things were normalizing. So that's one important change that has really come in this particular year. But Prashant, I want to understand, what has been the impact of the flurry of IPOs that we have seen, a lot of valuation uptake and a frenzy that we had seen in the past year, with many companies benefiting, but Paytm on the other hand went on a different trajectory altogether. Is there a damage on the valuations and the fundraising ability because of some of these events last year?
That's a very interesting question, Nisha. I wouldn't really comment on the Paytm IPO as such, but one fundamental aspect that has happened post the COVID scenario is that just the revenue model is not important. The business model is also extremely important. It is about the unit economics as well. Any company which can demonstrate innovation and can demonstrate a good business model will be able to deliver the results at the IPO. In terms of the IPO scenario as such, my personal view is that this is here to stay. It will only go up, because now what we're seeing is just not institutional buy-in, but even the retail buy-in going up by the day. That is the reason that we've had over 65 IPOs in the country and haven't had a better year. And with also the new industries which are coming in for an IPO, it's an industry which the consumer understands and relates to, the retail investor relates to. So I think IPO will be upbeat more than what it was in 2021, in 2022 as well.
All right, so that's a very strong statement coming in because of various factors coming together. Prashant, looks like that IPO market is looking slightly tepid at this point. especially on the valuation side as well. But that's a strong statement given your insights into the deal making. But one thing that 2021 stood out in the IPO season is that even though the new age companies were a new kind of business and people were learning the KPIs, the investors were very clear about what made business sense and what didn't. And that's why we had winners as well as losers as well. All right, gentlemen, hold your thought there. We have lots more to discuss on what lies ahead for the Deal Street in 2022 right here